You're a veteran and you want to use your self-employed income, you own a business, you want to use that self-employment income to qualify for a VA loan, but you haven't been self-employed for 2 years. Guess what? You're in luck. The VA absolutely allows that. Now, your bank or your lender might tell you that you have to be self-employed for 2 years. Not true. According to the VA guidelines themselves, that's not true. Let's dig into it. That's what this video is about. So, when we look at the VA guidelines, we see that 2 years is generally, if you have 2 years, you're good to go. That's stable, likely to continue. However, there is a sentence here: less than 2 years cannot usually be considered stable unless the borrower has had previous related employment and or specialized training. What does that mean? Now, your lender may not know this. Your lender may not specialize in VA loans, may not be around them enough to know, or they just may not allow them because of their own overlays. But what does this mean? This means that if you have become self-employed between 12 and 24 months ago, and it's in a field that you've worked in consistently throughout your life, throughout your career, then your self-employment income can absolutely be used or may be used to qualify depending on an underwriter's analysis of it. But in most cases, it could be. What are some examples of this? So I've worked recently with a nurse. She's a registered nurse. She's a veteran. She served for 4 years active duty. She's a registered nurse now, and she recently went into became a contract nurse, like an independent contractor travel nurse. So her contractor, she's been an independent contractor for less than 2 years. Bank that she went to told her she couldn't do anything. VA loan, she can. We're working with her right now, and that's just one example. She was a W-2 nurse. She became an independent contractor, and that her income is allowed to be used because she was a W-2 nurse before. I see sometimes like a carpenter or a plumber or like a tradesman, something like that. They work for a company for a while, W-2 employee of that company. Sometimes you want to strike out on your own, and you worked as a W-2 position. You start into self-employment. That's what this provision is for in the VA guidelines. If that's you, your income between 12 and 24 months can be used. Now, I would still recommend an underwriter analyze it, but do not take no as an answer from your loan originator. Find a loan originator that'll allow, kind of a company that will have fewer overlays there. And it says less than a year can rarely qualify. However, in-depth development is required for a conclusion of stable income. Less than a year cases, I haven't seen too many of those. It's usually like this 12 to 24 months where, and the real question behind the question there is, are you going to be able to make it as a self-employed buyer? So you don't need 2 years, that's for sure. Between 12 and 24 months, if you've had a history in that field, that can usually be used. We just got to prove stability, likelihood of continuing. Now, I will say that if your year-to-date income has decreased by half of what your first year income, your 12-month income is, then a lot of times that income isn't going to be considered stable either. And that's a subjective measure by an underwriter. I really want this to provide some light for you. If somebody's telling you no because if you've been a business owner for less than 2 years, this is the truth. Here's the truth from the VA themselves. So my name is Cameron.mccown. I make these videos because I know what it's like to not be a homeowner, and I don't want that for you. I want you to be able to build wealth. I'm also a veteran. I'm a loan originator. And so all of these work together for me to provide education, insight, and power to you as a buyer, as a home buyer, and knowledge there too. So hopefully you enjoy this and can use it. Take care.